The Reserve Bank of Australia has left interest rates steady at the record low of 2% following its July board meeting. With me down the line to discuss is Vyanne Lai. Vyanne, a weaker Australian dollar made the board's decision somewhat easier. The RBA has for a long time been targeting an exchange rate of 75 US dollar cents, and it finally got its wish on Monday. Glenn Stevens said in a statement that low interest rates were necessary to stimulate an economy operating at a rate somewhat below its longer-term average. But was this the right course of action at present?
Yes, I think the RBA is definitely doing whatever it can to stimulate the economy by lowering the interest rate to historically low, especially against the backdrop that there's very little appetite by the current Australian government to undertake any extensive fiscal stimulus. But as most economists know, the interest rate is a rather blunt tool to address certain types of economic issues and does take some time to flow into real activity. But we are seeing some signs that the low interest rates are filtering through to better confidence and business conditions. So in our business survey, I do think that, yes, the low interest rate has worked to date and the RBA has definitely done the right thing.
The bank has made 2 interest rate cuts so far this year, but has remained reluctant to lower them any further, despite a low inflation rate and elevated unemployment. That's the internal factors, but how much would China's current stock situation have weighed on the decision at present, if at all?
China is definitely very important in the consideration to the RBA when it comes to deciding the interest rate. But then if you're referring to the specific phenomenon of the sharp correction in the Chinese equity market in the past 2 weeks, I think perhaps it's a bit premature from the RBA's perspective to take it into consideration. I think the Reserve Bank is probably sitting tight and trying to sort of monitor this current situation will morph into something bigger, and also to better understand the contagion risks. And, if there are sort of evidence to show that whatever that's happening in the Chinese equity market is flowing into, the Chinese demand for our products, I'm sure the RBA will act accordingly. And, at the current rate of 2%, we will argue that there's probably more room to cut if there's a need to.
Unlike its previous meetings, the market responded calmly to the bank's decision. Unfortunately, the board failed to provide any clear indications on the future direction of interest rates, although it did refer to much lower commodity prices. But how long before another move is on the cards? And as things stand, do you think it will be up or down?
Okay, I think majority of market commentators and economists did think that the RBA will keep the rate on hold today. It wasn't much of a surprise, to be honest. But then, we do think that there are several challenges that the RBA is trying to deal with at the moment, and they're trying to sort of keep an eye out for the hot property markets and the rapidly rising property prices in Sydney and in Melbourne. But they're also acknowledging that perhaps certain sectors, especially now that we're witnessing a sharp slowdown in mining investment, there's probably the need to perhaps do more in the long run. So, but at this stage, it seems like the upside and downside risks are quite balanced at the moment. So we are expecting the RBA to keep the rate on hold for a substantial period of time, and the next move is likely to be up, but it won't be till the end of 2016.
Aussie traders can now look ahead to Thursday and the release of the employment change data. Last month was way better than expected, but was this a one-off, or do you believe there is hope of an improving trend in the job sector?
Last month's 42,000 employment increase did come off as quite a bit of surprise, but at the same time, it's a monthly data and the data can be quite volatile, so we try to not read too much into it. But at the same time, there have been some encouraging signs in the labour market pointing to quite a stable growth in jobs. Especially recently, there had been a significant increase in the hours worked by employee. Based on our business surveys, it does look like the trend is pointing towards a 15,000 job increase per month, which is sufficient to keep the current unemployment rate on hold stable, if you will. But then we do acknowledge that. But we do acknowledge that there's probably some challenges in the labour market that need to be addressed before we will see a more substantial improvement in the unemployment rate.
Vyanne, lovely to speak with you. Thank you. Well, our correspondent Natalie MacDonald will be bringing you the latest jobs and home loans data from Sydney towards the end of the week, so make sure you click back for that. For me and for now though, it is goodbye.